This is a review of the foreign stock index ETFs for the week ending July 29th and a look ahead for the week beginning August 1st. The first ETF we're going to look at is EEM, which is the emerging markets. And like the U.S. markets, the EEM has rebounded sharply off the Brexit lows and is now pushing against the top of the range. Rapid response Chaikin still heading up, accumulation, distribution heading up, and volume spread analysis indicating accumulation. So our basic outlook for EEM would be to hold long, and we would not be initiating new trades from this point because it is bouncing against the top of the range. And although the drift remains higher, we think that the best trading opportunities will come if indeed everything else stays in place when the EEM drifts back down toward the middle of the range. But our outlook for the EEM is to hold long. The next market we're going to look at is Canada. And Canada has had a pullback and is now in the upward retrace. But all of this has taken place in the top quarter of the trading range. So if you happen to get in long around 24 3/4, 25, then hold long. But by the same token, we would not be initiating new trades in this area. And another aspect of many of the foreign market ETFs, EEM being one, we didn't show it there, but you can see that the historical average true range is only 0.3, which is very small. And the average true range measures either the high to low of today's bar, of yesterday's close to today's high or today's low. And a 0.3 is not much. So if you were trading this index, you can't anticipate a 2-point move in a day. It's just not going to happen with the ATR. The next market we'll look at is Germany, EWG. And Germany has bounced up strongly from the Brexit lows and indeed is showing a good upward movement. It's not quite at the top of the range, but getting close. And our position for the look ahead would be the same, that because it's at the top of the range, we would not be interested in initiating new positions from this level, although it's a hold long and wait for the candle sell signal that occurs below the 8-period EMA. But it's a hold long, and just stick with it. The general drift of the EWG, the German index, has been down. So maybe we could take a look at a short once it's at the top of the range, but that's not here yet. The next market we're going to look at is Japan. And the last week, the week ending July 29th, was a bounce around week for the currency, and not so much for the Japanese index until the last day on Friday, where it gapped higher into a doji, which also pushed it at the top of the range. Now, the ATR for the EWJ is only 0.1, so this thing moves at a snail's pace. The whole range is only 11.19 to 12.05. So you probably just want to be looking at EWJ for informational purposes because it's a very, very slow trading vehicle and is almost not worth the effort to do it. Let's look at the Chinese large caps, and the ETF symbol there is FXI. And the FXI is at the top of the range and has now rolled to the downside. Not quite a sell signal in that it closed right on the 8-period EMA. The breakout chart, we like to see it close below the red line, and that happened. So it's really close to a sell signal if it's not already. If it opened lower than Friday's bar, then we'd have to entertain a short trade in FXI, probably a credit spread, because the ATR is only 0.14, and see the index closed at 35.43, and the 20-day downside is only 33.91. So there isn't substantial movement potential in this index enough to initiate a debit trade, assuming the implied historical volatility or the actual volatility would allow that. EWZ is the Brazil large caps, and that had been going sideways but had a pretty good bounce up on Friday. And if we zoom in on the trading range, the 9-day range is drifting upwards, as is the 26-day range. So, and the Ichimoku cloud in itself has a general upward drift. So if you're long EWZ, hold long. Don't initiate any new shorts absent a candlestick or breakout band sell signal. But by the same token, we would initiate longs because there just isn't the backup in the volume, the rapid response Chaikin oscillator, although accumulation distribution is showing that there is or has been steady accumulation of the EWZ ETF. So we'll hold long if you're long. We would not initiate new longs, and we would not initiate new shorts at any point yet until we see a sell signal and a rollover. Let's take a look at the trend quality. And we can see the trend quality that the EWZ has an upward drift. The 40-day and 20-day trends have an upward drift. The slope has rolled over and is heading down, and the ADX is indicating or reflecting the positive upward drift. But the down-facing slope of prices is not encouraging for long trades. So we would avoid longs in EWZ. Of the foreign markets, the best trading vehicle is probably EWW, which is the Mexico large caps. And one of the reasons for that is that it has an ATR of 0.8. We'd like to have at least one, but it's the closest we can find to one. And the option liquidity is often not bad. Sometimes you have to search for strikes or expiration months that have better liquidity than others, but you can often find them with EWW. Now, as far as the outlook for next week, it's already begun the downdrift, and that's supported by the volume spread analysis and the momentum oscillators on the right side. And the general course of the Mexican ETF has been sideways to down, but we would look for, say, the midpoint, the standard line, for a possible stopping point. So we missed the short on this by 4 or 5 days. So depending on what the U.S. market were doing at the time, if we saw some buy signals down around the mid-range, we'd have to entertain them. But that's a look at the foreign markets for the week ending July 29th, and a very quick look ahead for the week beginning August 1st. Hope you got something useful out of it.